What's up, everyone? Welcome to this video. Big moves in the market today. Recession fears and the stock market has dropped. SP 500 is down. All the indices are down. Everything is down. And now it looks that after the FOMC meeting that was just a couple of days ago, where the market had sort of digested the fact that Jerome Powell left rates unchanged. Now today, the latest payroll report and a big miss sent the markets tumbling down. So we're going to have a look at this. Definitely a big move down here for the S&P. Let's have a look at the indices. S&P dropping 1.84%, the Dow 1.51%, the Nasdaq 2.38%. So we're talking about big moves here. I don't really have the historical data, but moves that haven't been seen, I would say, since probably 2020. I'm not sure exactly, but definitely unusual moves down here. The DIXI dollar index down 1% and VIX shooting up 25%. So now in volatility, we are we're way higher. Volatility was down for a long time, and it was pretty unusual, and now things have been broken. Bitcoin also down from its highs. Ethereum now down under 3,000, and the most significant move really is going to come from the bond market. The bond market absolutely plummeting all around the curve, but even more so on the short end of the curve, which tells you the fear now is recession. And in our previous video, we were saying that it was going to be the case, that the Fed was going to be behind the curve. That's the choice that they have to make, because the resurgence of inflation would be way worse for them than a recession. And just now, a couple of days after the Fed meeting, the last payroll report coming in screaming recession. Gold was steady, and you would expect gold to fall down on recession fears, but no, gold is heading steady, and that tells you a little bit about the geopolitical situation. Now, gold not going down on recession fear, unlike oil, which went down and is probably going to go down a lot more. Gold maintaining, showing that there is some risk geopolitically on the horizon. All right, so let's have a look a little closer here at the move that we had on the S&P. We're down almost 3.4% at the lowest point. And really now, we're going to have to see if we move a little to a wider time frame here. It had been a while, right, since we had this type of correction. And now the question is going to be, is this move going to be sustained, or is this just like here, sort of a little drawdown, and we continue to push up? But of course, the fears now were not the same. We of course we didn't have a lot of red days or red weeks here. But the situation now, the macro situation, is very different, and it's a lot more scary now. And we've seen big moves in the companies here. Let's have a look at the heat map of the S&P. And as you can see, of course, red all over the map, but some major moves for stocks like Amazon, minus 8.78%. This is big. This is, how much market cap is being wiped out here when you talk about Amazon? Let's have a look here at, let me go back. Let's have a look at Amazon. Where is it? Here. So Amazon, you know, you're talking about the $1.75 trillion company. So you're talking about, you know, more than 100 billion in market cap of Amazon just wiped out here on a single day. And of course, if recession it is, then Amazon is going to be hurt big time, right? You know, being the major retailer that they are. Let's have a look at the rest of the S&P. Nvidia minus 1.78, Microsoft minus 2%, Google minus 2.4%, Meta also almost minus 2%, and Tesla minus 4.24%. And we see a few Apple maintained, and a few winners here today. We have Johnson & Johnson plus 2%, United Health almost 3%, McDonald's here also 3%, Procter & Gamble, Coca-Cola plus around 2%. And, you know, it shows you the only winners on this session have been defensive stocks. And maybe this is going to be the theme and the trajectory for this market. We're going to move to defensive stocks. Risk on is over, tech is over, and now we are moving into recession mode, and we're gonna be going with defensives. And let's have a look at the payroll report here on zero hedge, and the expectation was at 175. The payroll came at 114, and also downward revisioned from the previous month. All of these payroll reports are cooked, and they all get revised downwards. And it's probably going to be the same for this one. So even though it's 114, it's probably going to be revised downwards. And if the last one was revised downwards by almost 25,000 jobs, then we could be at 90,000 jobs actually, instead of the number that they're giving us, 3 sigma miss, big miss. And of course, now that leads to panic in the bond market, and we can have a look here. Let's have a look at the 10-year first, and you can see this huge drop here in the 10-year. We've definitely broken trend already, and now we're sort of getting into support territory here at the 4% mark, and we've lost it already. And we're gonna see now, is this the end? And you know, this is what we've been expecting the end to be, right? For a while, we've been expecting 5% to be the top of this cycle. And let's have a look at the 2-year here. You know, we had our line here on the 2-year, same thing. And we're seeing, you know, we've reached this top, and now the direction is going to be the other way around. Direction is going to be down, and it's probably going to be down as violently as it went up. And you know, the market that was thinking that, oh, this is great for asset prices, now is going to have the exact opposite mentality, thinking, oh, the more they drop rate, it means the worse the recession is going to be, and so the worse the fall in asset prices is going to be. But definitely very big move. Trend lines are broken. Support here also broken on the 2-year, and the same thing all along the curve here, even on the long end. And yeah, see, we've broken here support, this local support. And yeah, trajectory now for yields is down, and TLT shooting up. We have we reached the bottom here in TLT. We had spotted it on the chart, and now Now maybe we're going to go up on TLT, but there's definitely going to be struggles now going back up on this, especially if you consider everything that's happening on the macro scale. So people are talking a lot about the yen carry trade that is unwinding, and that's going to bring a lot of treasuries on the market. And so even though you think, oh, the long end yields are going to drop, you have to also be worried about a lot of supply that could be coming from Japan as the yen carry trade just goes away. And here, if we have a look at the USD JPY, we hit the 160 here, and now we're going down big time here on the USD JPY as the BOJ has decided to go and raise rates. And this coincides perfectly with the drop in the US market and the US tech, which of course has been, aspiring all this capital, taking in all this capital, moving in from the yen carry trade. This is now over, and this is going to bring a lot of headwind to the bond market and to the long end of the curve of the bond market here. So if we go back to TLT, there's going to be a lot of resistance as we make our way back on the other side from this drop, because there's going to be so much supply just in long-term bonds that are going to come on the market. And there's also going to be a lot of supplies on short-term bonds, as the Treasury is just going to print short-term bonds to try to get money. And so, yes, the Fed is going to drop the rates, but also the market is going to fight them on the other side of this trade, because everybody's going to try to get cash. To make it simple, everybody's going to be looking for cash. There's less and less liquidity in the system, and people are going to be selling assets and maybe fire selling assets to be able to get some cash. Let's have a look now at Market Watch. So their headline: 74% of the S&P 500 components fell Friday, and Amazon plunge was the most dramatic. We've already seen that. Definitely a dramatic move for Amazon, such a big company. Opinion: the market has a sinking feeling that the Fed has fallen behind the curve. Of course, we've said it already. We were saying it even before today, but the payroll report was really the camel that broke the straw that broke the camel's back, not the other way around. And here we have Intel borders existential crisis as the stock could see worst fall in 50 years. And today I did buy Intel, and I'm going to tell you exactly why, even though, well, maybe the right time to buy is when you have these types of headlines, right? When they're telling you this is the worst day in 50 years, it's probably the best time to buy, to be frank. But of course, this is not financial advice. This is just what I'm doing. You do you, and you figure out what you need to do. We'll do that after. Let's have a look at Intel first. Why did I buy Intel? And of course, the day where, well, if a stock drops that much, and it's a company like Intel, it's a company that's having trouble. It's sort of like Boeing. Boeing has having so much trouble with their plane, the 737 Max, all that, and quality issues. And Intel is sort of I would say, they're exactly in the same situation, where they're one of these huge U.S. corporation that was always ahead of everybody, and now the other companies have caught up and they don't have their technological hedge that they used to have, and they're sort of like stuck with all these management problems that they cannot avoid because they've become so big that, government is all up in their stuff. You have power struggles within these companies because they're so big and management is so big that some of the decisions that are taken into these companies, they have nothing to do with the business itself, but more about the way management structures work. And that's the struggle that they're in. Just as a lot of these big US companies are in this struggle, and I don't think it's gonna last for so long, because once this market starts to drop and people start to really sort of become more responsible because of the circumstances, then these companies are going to be very reactive, and these problems are going to be sorted by layoffs. That's what's going to happen. And today we had Intel laying off 15,000 people, so a lot of people, and I expect a lot more to come. But to go back to Intel and why I'm buying it today when it drops like this, you would think, oh, well, that's not a moment to buy when it drops like this. If it drops, it means it's a terrible company. Well, a company that goes down 26%, it's a lot better to buy it today than to buy it a week ago. And of course, it's one of my stocks, so one of the stocks that I've been trading. And I had bought originally here at the 24 mark, and I rode it all the way up about here between 38 and 45, and sold sort of in this range. And now we're dropping, and I didn't expect a drop like this. I didn't expect a 26% drop in one day, even though, of course, they had bad earnings here. We can have a look. What does it say? Surprise to the downside, big surprise to the downside in what was that, earnings and revenue, so EPS and revenue. And yeah, it's bad, but a drop like this on a company like this, a company that's like $100 billion company, is this rational? Maybe it is rational, but if you really look, if you zoom out and you look at this on sort of a bigger picture, let's look at it on monthly frame. And you see this drop here, and we're at 21 here. So we're here. You're getting this stock back at prices that you've seen in 2013. So from today to 2013, the stock has never been cheaper. And of course, there's chances that this stock is going to continue to go down, and that, maybe that's not the end. Maybe we go, a little further. Maybe we go to 17. Maybe we even go to 12. Who knows? Maybe we go to the base. But, after selling this stock at $40, then, when I see it at $20, just like a few weeks later, I'm gonna be buying. I don't see I don't see it as a problem. There's a huge discount really from what I sold just a few weeks ago. And is this a company that's significantly different than it was just a few weeks ago? Absolutely not. It's the same company, and it's the same problems that they already had. And, I'm buying into it knowing the problems that they have, but also thinking that, first of all, it's a major company. They're not going to die out tomorrow. And it's a company that has the ability to be reactive. It's a company that has the ability, to finance itself in the future. And even though they're going through a bad period now, I think that they will be able to turn it around. Of course, they're never going to be NVIDIA. They're never going to be, that at the forefront of what is being done now in chips. And they're sort of going to be like more of a laggard behind the leader on the scene. But to get it at the price that it was back in 2013, I think that's a pretty decent deal, especially having made money on the last bounce. We could very well have another bounce up, on this one, just because this move has been so violent, and maybe I'd sell it, or maybe I'd keep the stock. This is a stock that now has cut all their dividends because of this earning report. But eventually, I expect them to be reinstating the dividends once they sort their problems out. And this is a company that will do that. They will return capital to shareholders because they don't really have anything to do with that money, with that capital. And the best thing that they can do is really to return it to the shareholders. And they're never going to be able to really, well, you have to see, you also have to think that, okay, today they're really far from NVIDIA, and they look to be pretty far from AMD and all the chip makers. And these guys were ahead like a decade ago. In 2013, they were ahead of everyone. And now they're behind everyone. But there's also considerations that are different. And, like if something happens with Taiwan, then what is NVIDIA going to do? Like if the geopolitical situation gets really tense, then you could be in a situation where Intel is the only game in town all of a sudden. And that would change everything, in terms of semiconductors. Of course, this is not like something that's like, oh, we expect that to happen. It's not a base case scenario, but even if it's out of left field, you have to think about these things. Don't discount, the things that are sort of unlikely as being impossible. But anyway, for me, having taken that move up here before and having sold, not at the top, but, in a good position, having made a good profit here. I was about 70%. Having made 70% on the way up, well, now I don't really see a problem buying it back around 20, even though it might fall down some more. This is something that I'm going to keep in my sort of long-term portfolio. This is a dividend stock that I kept in my dividend portfolio. And even though I sold it, now I'm buying back in, and they don't have dividends now. But I'm sure that in the future, when they sort out their problems, they will reinstate dividends. And maybe it will be the time to sell it when they do that. So let's have a look now at Bitcoin. Here, Bitcoin dropping also, and Bitcoin has been in this pattern now for a while, and we're sort of chopping around and not really showing any direction here on Bitcoin. Of course, it's going to be very difficult for Bitcoin to go up if all the markets are going down and if liquidity is going down. And I'm not sure, I don't know which direction this is going to go. But it's very unlikely that Bitcoin would keep going up if the whole market is going down, but it's not impossible. So not something you would discount it either. But most likely, if liquidity is going down, then Bitcoin is going down. And even more so for ETH. Here, ETH, same thing, but of course, taking a little more of the downside and so on. The more you go down, sort of the crypto market cap, then the more battered the cryptos have been. So yeah, definitely something to watch in considering the things that are happening in the geopolitical scene with the probable attack from Iran on Israel that could happen very well this weekend. The markets are closed, but the crypto market is not closed. And if you remember last time that Iran attacked Israel, that was a big drop. I think that was this one here in April. Was it April or was it March? I don't know. I think it was April. I think it was this big one here, this big drop. And you can see how low it went. But events like that, especially happening on the weekends, can have a major impact on the crypto. So you got to watch out for that. But let's move now here on CNN. So here's what they say, U.S. sending carrier strike group to the Middle East, bracing for an Iranian retaliation against Israel. So this is exactly what we're saying. And of course, this is going to have a huge impact on the crypto markets during the weekend, and it will have an impact on the regular markets come Monday. And of course, we'll have to see what happens. Last time that Iran attacked Israel, Israel was able to defend itself and really didn't create much damage. And as much as there was a drop in the crypto market, when it was happening, the market quickly recovered. As you could see on the chart, it just wicked down and went back up when everybody realized, well, it was sort of a de-escalation strike. But we will have to see if this is going to be the case. Most likely, I would say this is not going to be the case. This is going to be a big one because of the high profile of the person who was targeted, Ismail Haniyeh, the chief of the Politburo of Hamas, and who was killed in Tehran, so on Iranian soil. So it could very well be that this strike is not sort of a de-escalatory strike this time and could be an escalation. In other news, Trump and Kamala Harris have agreed to a debate on September 4th. This one was interesting. Children of undercover Russian spy couple only learned their nationality on a flight to Moscow. This is like the TV show The Americans. Like, even their children didn't know they were spies. What else? Yes, we have Josh Shapiro here. We'll see this on the X here. So this, let me lower the volume here. This is a political ad for the mayor of Philadelphia, I think. I'm not sure. Democratic mayor who basically released a campaign ad that revealed that Josh Shapiro was going to be the running mate of Kamala Harris. So very likely it is that we're going to see a ticket with Kamala Harris and Josh Shapiro for vice president. Here you see it. So who was this? They don't say who's the mayor. But anyway, here's the news. Very likely that we're going to see Josh Shapiro being the VP. And it will be interesting to see sort of what happened. It would seem a very strange ticket for the Democrats to go that. With Kamala being far left and then her VP being sort of the rightist wing of the Democratic Party, and trying to sort of appeal to all sides. But is it going to be a case where he's just going to hurt her? Maybe, because he's not extreme leftist enough to satisfy the base, the Kamala base, and then he's not really bringing much to her ticket. On the contrary, he could actually hurt her and not necessarily deliver on the side where they think he's going to deliver. Is he going to appeal to the people of Pennsylvania and sort of the people that Trump has tried to appeal with J.D. Vance? it seems very unlikely that Josh Shapiro would be the guy that would convince these type of voters to vote for Kamala, especially when you have JD Vance on the other side. But we will see, and of course, nothing is set in this election. But to end this video here, we're gonna have a good one. This is Joe Biden when there was this exchange of prisoners of Russians and Americans, and Joe Biden not really knowing what he was doing, just going in the plane, and everybody's watching and wondering what the hell is happening and what is the president doing, and should we tell him he's not supposed to do that? I don't think. They look kind of lost, and they're just waiting. Let's just let him do his thing, and let's try to not bring attention to this. But anyway, it was a little funny thing for the end. But thank you for watching this video. Big decisions await next week regarding the markets. Is this the beginning of a major dump in the stock market? It could very well be. But we could also go the other way around, and things are not going to fall in a straight line, and eventually things are going to bounce. And even if we're going to have a sustained move to the downside, there will be counter moves on the other side, just because of how the option market is done. And when we see that now, people like the options. I'm not sure exactly what the put to call ratio is, but this is going to be, one of these moments where everybody is betting on the downside, then market is going to react the other way around. But still, maybe next week, a good opportunity for to make some moves. And especially if we see the market moving up, then maybe this is the time to bet on a continuation to the downside. But we will see what happens next week. And apart from that, of course, you have to watch what's going to happen on the geopolitical scene. And Iran is going to be, I'm guessing, in the news this weekend. We'll have to see and wait tomorrow and Sunday for that. Anyway, thank you for watching this video. Don't forget to subscribe to the channel, like the video, and I will see you on the next one.
Hit me with that like, and sub to the channel. Hit me with that like, and click the effing bell. Click that bit, alright. The algo recommends, for sure you gon' like. The algo knows you well. Hit me with that like, subscribe to the channel. Hit me with that like, and click the effing bell.